Let's talk about Mediclinic now on the home front. And although, of course, it is international because it has hospitals in Switzerland, the UAE, the UK, and South Africa.
Indeed. So it's an interesting company. It's done expectedly well in the recent decade, but then with the most recent split and reorganization and change in the share code, reinvesting itself onto the London market by way of that reverse takeover
Of Noor.
Exactly. Now it's hit a bad patch because the Middle Eastern numbers have been poor, and now it's listed in London, and there's a Brexit issue, and no one can work out what the share price is doing.
And Paul feels that this is a temporary downside pressure on Mediclinic.
Problems.
Market cap 88 billion rand, no PE ratio, dividend yield of 1.4%. I don't know why they don't suspend the dividend. Just look at the share price graph.
And so this is not really, well, it is sort of a 5-year chart. What has happened here is we're just looking at the repositioned Mediclinic MEI, and that's why you see that it's not a full 5-year chart. It's actually just what has happened since it did the reorganization. Yeah. So that's not good. 200 down to 122.
To 122, and we have held it all the way down, Joseph, just to put a little bit of context into this.
That is correct. So it's our biggest loser in our portfolio.
What do you think?
And the update, I think, on Tuesday did not help at all. So it takes a 7% knock on the day, given obviously the revenues coming.
7% knock on the day.
Coming under pressure, and I think it's in Abu Dhabi.
Dhabi.
So they bought Al Noor, which is in Abu Dhabi. They had operations in Dubai. Now they're putting them together.
Yeah. So
that's where the problems are.
Yes, and certainly the pressures on the revenue have continued. I think if you look in terms of from the chart, which is that it has been coming down gradually and flat last year, and all of a sudden taking a knock. So it's 44% down from its peak, and we're down about 6% year to date.
Now, after it fell, that 7% after it announced it was results, it was a trading update effectively. You weren't compelled to go in and buy it.
No.
I just wanted to clarify his stance.
But you know what irritated me about the announcement was that 85% of the business is from Switzerland and South Africa. Both of those businesses doing well. They spent 7 paragraphs in the trading update explaining why the United Arab Emirates business was doing badly, which has to do with the reduction in medical aid benefits which come from the state. You know, these countries, the citizens of those countries have all these wonderful benefits. What they said is there's now going to be a 20% co-pay in Abu Dhabi, which means that individuals, instead of just having it all on the house, now have to give in.
Well, you see after those 7 paragraphs how well you understand the situation.
But what's bizarre about it is to put out a trading update. I don't know why managements don't get this. They must talk for 17 paragraphs about the businesses that are doing well, and then for 7 lines or 7 small words about the bad business.
Spoken like a shareholder of Mediclinic who's lost a lot of money.
The idiots who are on the trading desk like, what, sell.
They need to get report writing skills from Paul.
Yes, absolutely. The glass half full, always.
Anyway.
Hot or not?
Not hot.
Hot or not?
Look, the fact is they've got the UK business, Spire, which they bought only 30% of. People have been wondering whether they're going to buy out the minorities, but with the Brexit thing, maybe it's a good thing just to do nothing. The Switzerland business doing fine. The South African business doing fine.
Hot or not. You don't need to go through the results again.
You know,
just
we
give
own
me
this
your
one,
stance.
even in the portfolio, we've added to the portfolio position. So we've kind of filled our boots already. So
questionable move on that front.
Obviously hot.
Let's move on.